The rand trading back around that 690 level this morning, so a bit of strength coming through for the rand. Of course, we had that G20 meeting of finance ministers over the weekend. Do you think that the developments at that meeting are helping the rand to strengthen, or rather the dollar to weaken this morning?
Good morning, Stephen. Yes, I think the rand this morning is really benefiting from the dollar weakness, and is also benefiting from the strong commodity prices. And this morning, the Asian market also opened very strong, and I think that also supported the stronger buyers of the rand. But then looking at the G20 meeting, I think the meeting was also really encouraging, especially for emerging markets, although there was no concrete decision that came out of the meeting. The communication was really encouraging because the group of 20 did agree on some kind of a way forward. They did agree that they refrain from competitive devaluation of the currency, and they'll just continue to support a market or exchange determined currencies. And I think, you know, even though there was no concrete measures that they did agree on, but then the fact that they agreed to move forward and to not support this currency wars did support most of emerging market currencies this morning.
Of course, we have had suggestions from the US Treasury Secretary that we should be targeting trade accounts and our trade surpluses and deficits. And of course, South Africa does run a trade deficit generally. That's going to be taken forward to the next G20 meeting, which takes place in about 3 weeks' time. Do you think this is something that could benefit the rand going forward?
No, yeah, it could benefit the rand going forward. But then remember, even here in South Africa, we have the medium-term budget policy statement that we're looking at, and that also is going to really give the rand direction, because if we have the finance minister announcing those measures to try and contain the currency, then that can have a negative impact on the rand. But then for us, we don't believe that any measures will be taken, and if such measures are not really taken by the minister, then we can see more probability of interest rate being cut in the next few meetings.
And of course, we have that announcement coming out on Wednesday. We also have consumer inflation numbers out on Wednesday, and quite a busy data week. We've got employment numbers coming out, and also trade and credit. Perhaps starting with CPI, what was Standard Bank's expectation for consumer inflation? Are we going to continue to see it easing back? I think the last reading was about 3.5%.
Standard Bank for the September CPI inflation is expecting 3.3%, and that is down from 3.5% in August. And our forecast is really in line with market expectation. And when we look forward, we believe that this will be the trough in the cycle, and inflation will just continue to edge higher a bit in the next few months. But then we don't believe inflation will be out of the target range, at least until end of next year or even in 2012.
Globally, we've got some GDP numbers coming out of the UK and the US this week, third quarter growth numbers. What are you looking for there?
Oh yeah, on the international data, we're expecting UK GDP to slow down in the third quarter, and US GDP is expected to accelerate. And given that these estimates will be the first estimates of both UK and US, the market will be closely watching on it. And remember that we have also a lot of speculations from these two countries that they will implement further QE. So if the data does surprise on the downside, we might see a lot more speculation in terms of what the Fed and the BOE is likely to do in the next few quarters, and that might also have a negative impact on their currencies.